Okay, let's move on to the Hindsight Oracle indicator, which is probably the most unique in its approach. Alright, firstly I would like to define the core elements of this indicator, and then we'll move on to MetaTrader and we'll play around with the indicator, okay? Right, first, this indicator is based on the repetitive nature of both the markets and the price patterns taking place within the market. Okay, I am sure you realize that this is basically what technical analysis is based on. All right, finding repetitive price patterns so we can exploit them over and over, right? If this is the timeline in your charts, basically our job as technical traders is to analyze one specific price pattern, learn it by memory, see how the markets behave once we see one specific price pattern, so next time that price pattern actually happens once again in our chart, well, then we know how to trade, okay, how to behave, how to react as traders based on previous examples, okay? Let me actually give you an example. Let's imagine we have our typical downtrend with price printing downswings, okay? And we as technical traders usually like to draw our trend lines whenever we see a trending situation, right? Well, what we like to do, for example, is to wait for the pullback to come back to retest the trend line, and if from there we see a bounce off that trend line, chances are that we are going to see a whole new move, a whole new swing in the direction of the trend, and therefore we'll be able to profit from that downswing, right? Now, how do we know that chances are that if we do see a valid bounce of a trend line, we may see a whole new swing in the direction of the trend? Well, obviously by past experience, by analyzing how price have behaved in the past once it actually bounced off that same trend line. All right, so technical trading is all about analyzing past price patterns, specific past price patterns, analyzing the market outcome, see how price actually behaved once that price pattern actually took place, and from there in the future, whenever we see that price pattern once again in our charts, well, then we know how to react. We know that if we see that bounce of the trend line, chances are that we are going to see a whole new swing in the direction of the trend, right? And obviously we profit from it, right? Well, that's the core principle of the Hindsight Oracle indicator. Firstly, the indicator analyzes current market conditions and current price patterns that we may be seeing right now on any specific currency pair and time frame. Okay, basically it takes a static screenshot of what's going on right now in the market. All right. Then it browses through historical data for that same currency pair in that same time frame, searching for the same pattern, or at least for a similar pattern, similar to what we are seeing right now in our charts. Okay. Then, based on how price developed after those past patterns, it gives out a potential outcome on how price may behave right now, right, in real time over the following X amount of bars. All right, so let me try to reword that. Firstly, it analyzes what's going on right now, then it searches for that same situation in the past, then it analyzes how price behaved or evolved in the past from that price pattern onwards, calculates that past outcome, and then it brings that outcome forward into the present in order to give out a potential estimate on how price may behave over the next 10 or 20 bars. That's why this indicator is called the Hindsight Oracle. Okay, the Oracle because it kind of gives you a potential outcome of current price action, but based on hindsight proofs, okay, based on hindsight information, okay? Now, anyway, I do realize this may sound a little confusing, so I reckon it's just best if we move into MetaTrader and we just see the indicator in action, shall we? Okay, here we are. We are right now looking into the euro against the American dollar, 1 hour time frame. This is what your screen will look like once you apply the Hindsight Oracle into your MetaTrader platform. Basically, it splits your chart windows in half. The upper half is current market action, okay? The current chart, that's current price ticking live right there, okay? And the lower half is the indicator itself. Basically, like I said before, the indicator analyzes what's been going on in the market right now, and then it browses through the historical data for this same currency pair and time frame, searching for similar patterns that may give us a clue as of how price may behave in the upcoming hours or days. Okay, so from here to here we have 5 days worth of price action. Okay, well, obviously the indicator analyzes the type of price action we are seeing as of lately. Let's do that ourselves. So price saw a nice rally up, then a mild retracement, then another push up, another sharp push up, then price kind of consolidated sideways, another strong push up, another consolidation, another sideways consolidation, and as of lately a heavy retracement down, okay, a heavy drop down. Right. Well, the indicator has been searching for this same price pattern through the historical data, obviously related to the euro against the American dollar 1 hour time frame, and it's found this. From the 15th of March 2012 to the 20th of March 2012, so as you can see, this is also 5 days worth of data, just so you are comparing apples to apples and oranges to oranges. The indicator found a similar price pattern. In fact, both price patterns correlate at an 80% factor. Okay, so let's outline what happened back then in March on the euro against the American dollar 1 hour time frame. So a nice push up, a mild retracement down, another strong push up. From there, a little bit of a sideways consolidation, another nice push up, sideways consolidation once again, and from there a heavy retracement down. Now, please do compare both price patterns. As you can see, they totally relate to each other, or to be more specific, at an 80% factor. That means that they are 80% similar, both of them, on how price behaved right now in the market, as of how it's behaving right now in the market, and as of how it behaved back then in previous circumstances, correct? Well, from there on, the indicator calculates potential upcoming price action based on how price behaved back then. Okay, so as per the indicator, as per this specific situation back then, price behaved with a nice move up, another consolidation, and another push to the upside. In fact, here the indicator quantifies that price evolution. Okay, over the following 5 bars, we can expect, based on how price behaved back then, to price move 18 pips to the upside. Over the following 10 bars, price potentially could move 21 pips to the upside, and over the following 20 bars, price may move up by a total of 73 pips. So from right there, which is right there, current market price, if we follow the projected price behavior, in 5 bars, price is going to be at more or less potentially at plus 18 pips, in 10 bars at plus 21 pips, and in 20 bars at plus 73 pips. Okay, which is basically more or less the similar outcome that we've seen, that the indicator has given us down here. All right. Anyway, like I was saying before, this indicator basically works on any currency pair and any time frame of your choice. We've just seen the 1 hour time frame, okay, a short-term time frame. Let's now move on to a long-term time frame. For example, the weekly. All right, the weekly chart. This is the euro against the American dollar weekly chart. So we are going to analyze what's happened in the market from this moment onwards. Since this is the the weekly chart, a very long-term outlook, this is probably worth I don't know, let's say a year worth of price data. Okay, so let's see the type of price formation we've seen as of lately. Okay, from here onwards. So sideways price action, a very sharp move to the upside, then a little bit of a wiggling, price behavior in there. From there, price began trending down, a retracement up, a little bit of a wiggle again, and finally another sharp move to the downside. Right? Well, the indicator has found all the way from May 1998 to December 1999. Again, please remember that we are looking into the weekly time frame, very, very long-term outlook. Obviously, the indicator adjusts the time scope depending on the time frame you are applying the indicator onto, right? If you are applying the indicator on the 5 minutes time frame, chances are that it's going to search for similar price patterns only in the last few days. If you apply it to the very long-term charts, such as the weekly or the monthly, the indicator will push back quite a number of years back in time, right? Anyway, so like I say, let's take a look at the type of price action the indicator has found through the historical data. Sideways price action, a sharp move up, a little bit of a wiggle. From there, price began trending down, another retracement up, another wiggle, and as of lately, another push down. Okay? So, if we compare both, both price patterns, both the current one and the previous one, the one happening in the past, we see that they correlate at a 76%. All right? And, well, this is the type of prediction, the type of price projection the indicator is calculating. Okay, the indicator calculates that from here, from current price price level right now, price may see a push to the upside, okay, a little bit of a retracement, and from there the downtrend will continue. Okay, a little bit of a push, of a retracement, and from there this current downtrend that we are seeing right now should continue pushing onward. And moreover, just as before, it gives us the prediction in the last for the next 5, 10, and 20 bars. For the next 5 bars, price will hardly sit at plus 15 pips, meaning 15 pips above current market price due to that little retracement. Okay, over the next 10 pips, price is going to be sitting at minus 330 pips, means that that means that price will begin trending down, and as per the next 20 bars, price is going to be sitting at minus 1,120 pips, probably due to this projected nice sharp down move, downswing, as I was mentioning before, in the direction of the trend. Okay, so obviously the recommended course of action as per this indicator is to let this pullback die out. Okay, let price take off on this pullback here, and if price begins to turn around from there, as it had happened before, right, as per the indicator's projection, then it means, or chances are, that there is a high probability that we may be seeing another recurrent pattern in the market, and therefore this previous pattern that we've seen in the past may actually take place once again, right? So as this pullback dies out, and as you see price curling around to the downside once again, and basically as it begins trending down once again, your course of action should be to be searching for short opportunities in order to profit from this upcoming downswing. All right, so this is the portion of the chart where, again, as the pattern kind of fulfills itself and the downtrend resumes, you want to start searching for your short opportunities there, looking to profit from this projected upcoming down move. Okay? Okay, let me give you another example, this time around on a completely different currency pair and time frame, just to prove that this indicator works basically again on every currency pair and time frame. We are now looking into the euro against the sterling pound on the daily time frame. All right, different currency pair, different time frame. Anyway, so as of lately, this is, by the way, about 3 months worth of price action, since this is the daily time frame. So we've seen here some sort of a U formation, okay? And the indicator here, all the way from October 2011 to February 2012, found a similar price pattern, at least similar, let's say a 72% similar price pattern, right? Since that's obviously the correlation factor. Anyway, so U formation there, another U formation there. Actually, we see another U formation right after, another U formation, even though this one is much bigger. A smaller, certainly smaller swing down as well, kind of like a U formation as well. Another smaller formation there, another smaller downswing. From there, price took off, it gained acceleration to the downside. Pretty much the same thing, some sort of an up peak here, all right? Do you see that up peak there? Similar to what we see there. From there, another up move, a little bit of a consolidation, of a sideways consolidation there, and price eventually moved down to current price level, right? So here, after this up move, price moved up once again. Actually, a little bit of price of sideways range-bound price action once again, and from there, price moved down, just as we've seen as of lately. Alright, so like I say, these two price patterns correlate at a 72% factor. In my experience, anything above 70, 75 is already, close enough to start, taking the projected outcome seriously. All right. However, as we see on the projected outcome, as per what happened back then, it seems like price continued flapping sideways. Do you see that? Okay, it seems like, actually it's been quite a while that price has been flapping up and down sideways, and as per the projected outcome, it seems like price is going to continue following the same price pattern, okay, up, down, and eventually kind of closing more or less at the same price level. All right. So that's actually another benefit of the Hindsight Oracle indicator. Not only you get to see an estimated guess on how price may evolve over the following bars, right, as per the projection, but moreover you get to see or you get to be warned, alerted in advance of the type of situations that you don't want to trade into. Okay, and this is a fine example, really. Do you reckon that you want to get yourself into this type of price behavior, right? When price is simply flapping up and down around a horizontal price level? Well, in my advice, in my experience, you don't want to trade whenever you see this type of price situation, this type of market situation, because, well, quite frankly, price is going nowhere. It's simply flapping sideways around one specific level, and that usually wears on your patience, and eventually you end up taking a very, very wrong trading decision. So, if you were perhaps contemplating taking a trade on the euro against the sterling pound in the daily time frame, and you pull out your Hindsight Oracle indicator, and you see that this is the estimated price action over the following bars, well, perhaps you may want to think twice about taking that trade, because again, as per the estimated guess, as per the projection, price is going to continue being range bound over the following 20 bars or so. Okay, so if you see this type of situation, my advice is simply search for trading opportunities somewhere else, and that's a problematic trade that the Hindsight Oracle indicator has kept you away from. Okay. So to sum it up, let me real quickly summarize the main benefits of the Hindsight Oracle indicator. First of all, the most obvious one, of course, you get a high probability projection of upcoming price behavior. And please mind that I say high probability projection. And the reason as to why it's a high probability one is, like I said before, because the indicator only gives out those projections based on past price patterns that resemble very closely to the type of price pattern we are seeing right now in the market. Okay, remember that it gives out that correlation factor, and it only it tries to search for patterns that correlate minimum 70%. Okay, and therefore, if the price patterns correlate closely to each other, chances are that the projected outcome is going to be far more reliable. All right. Second, you get to know a quantified projection in pips. Remember, the indicator gives you the projection in 5 bars time, in 10 bars time, and in 20 bars time, right? And it gives you the specific, the specific amount of pips based on that projection as of how far price may move in the upcoming future. Okay, that gives you a very set and fixed mind frame to work on, because you know the exact amount of pips you can expect to price to move as per that projection. All right. Moreover, if the projection goes according to your plans, you have the green lights to take the trade. Let's imagine you were looking to take a trade on any specific time frame and currency pair, and then you pull out the Hindsight Oracle indicator, and the projection does indeed go according to your plans. Let's imagine you were looking for a long entry, for a buy entry, right? And the projection, does imply an up move over the upcoming 10 or 20 bars. Well, you have the green lights to take that trade, because that's indeed a high probability trade. Not only your system tells you that you should go long, but moreover, the repetitive nature of the market gives you a high probability signal also to the upside, and therefore that's, like I say, that basically gives you the green lights, knowing that you are facing a high probability setup. Okay, and in the other hand, if the projection does not go according to your plan, well, it keeps you away from a problematic trade, right? Just as we've just seen on the last example, if you see that price is simply going to remain range bound over the upcoming 10 or 20 bars, or let's say that you were looking to take a buy trade, a long entry, but the projection actually points to the downside. Well, that's a conflicting signal there. It's perhaps you may want to reconsider your analysis, or altogether, hey, search for trading opportunities somewhere else. Stay away from problematic trades, and that's the very best way to keep your win-loss ratio as high as possible over the long run. Okay?